All right, welcome, risk managers. This is Dan Sugar from TrendlineBreak.com. This is my very first inaugural YouTube video, so definitely please like and follow the page here, and I'll be uploading some good YouTube videos periodically with some nuggets of wisdom. But my first one today is going to go over a little blueprint for success. I put together a nice little blueprint for success, and I call it my pyramid to profits. I call it also the eight-legged table. Without, if you don't have all eight of the things working in your favor, then it's not going to stand. And you definitely need all these eight things to be consistent, no matter what you're trading, stocks, futures, options, foreign currencies. So I just want to spend a few minutes on each one of these and explain in a little more detail. And you can get your free copy. There'll be a link at the bottom of the YouTube page here, and you can click on and get a free copy of this PDF, okay? The pyramid to profits. So number one is a process. You have to have a process. It might take you a couple days to hone or a week or two to develop your process, but do a couple different things and then get your process down. Some of it you can do at night, some of it you can do in the morning, depending on your time availability and your schedule, but you need a process. I think successful traders are creatures of habit, and it might only be 20 minutes, 10 minutes, half hour. I do a complete pre-market routine every morning in my live trading room from 8 to 9:15, going over the economic calendar, what happened in the Globex session the night before, and all the futures markets that we track and trade, and draw some zones and look for some patterns and draw trend lines. And that's my process. But every day we do that like clockwork. So you have to have a process. You might already have one. Great. You might already have a couple of these things, and you'll need a couple more that'll help you. But successful traders definitely have a process and follow it every day. Don't deviate. The second thing is preparation. You got to be prepared. You can't just roll out of bed, grab a bagel or a smoothie and a coffee and fire up your platform and start trading. That's not going to work, obviously. You may have done that in the past, but it's not going to work. You have to be prepared. Part of your preparation is your process. So, what's the trend doing, up, down, or sideways? What's the underlying status of what's the underlying playing field of the euro, of crude oil, of gold, the mini NASDAQ, whatever? Trading sideways? Are we having lower highs, lower lows, downtrend? Are we having higher highs and higher lows, uptrend? You got to know that. So that's part of your preparation. What's the trend? And in an uptrend, you're looking to buy dips and pullbacks to demand zones or uptrend lines. During a downtrend, you want to sell rallies and get short at supply zones or downtrend lines, or maybe some moving averages as well. But you got to be prepared for the trading day. The third thing in my eight pyramid to profits is going to be patience. Patience, grasshopper, as I always tell my students, you have to be patient. You've probably read about that in a bunch of books, but it's so true, so true. Good traders are impatient with their losers and patient with their winners. Okay, letting those winners run as much as you can, and patient for getting into a trade. Don't just start, seat of the pants, get trigger happy on the mouse because you think something's going to happen. You want to be prepared, and that leads to good patience. And it's really about quality over quantity. Definitely quality over quantity. So be patient. Number four would be psychology. You have to have a proper mindset. How are you going to bounce back from 3 or 4 small losses in a row? A lot of times you'll have 4 small losses in a row, $100, $150, $125, $75, and all of a sudden you're down $400 or $500, and that fifth trade is your 5-to-1 really mamma jamma winning trade, but you're hesitant and tentative because you don't want to pull the trigger because you just lost 4 times in a row. And then that fifth trade, you risk 150 and it makes 750, $800, and that profit would have wiped out all those small losses plus left you with 350 or 400 of profit. So, and then same thing on the upside. If you have 5 or 6 winners in a row, are you going to get all overconfident and arrogant and cocky and get rid of your rules, get rid of your discipline, and not use stops, whatever, because you are holier than thou and you had 5 winners in a row? No, the market's got a way of slapping you back into reality real quick. So self-control, discipline, and that's all part of psychology, a proper mindset. There's an old saying, the bulk of your trading profits come not from what you know, but how you think between the years. What's the one intangible that separates successful traders from people that are struggling? The mindset, and you guys know, if you have skin in the game and you've traded live out there, you know exactly what I'm talking about. So Psychology is very, very important. That's the last thing, but for me, it's in the middle for the pyramid to profits, but very, very powerful. Read 1 or 2 good books a year, 3 books a year on the proper mindset. There's a lot of them out there, okay? So proper psychology. And again, the bulk of your trading profits come not from what you know, but how you think. How are you going to segue from trade to trade without any negative baggage or any head trash? Number 5 is probabilities. You have to have an edge. You have to play the probabilities, and successful trading is a game of probabilities. It really is. So if you have any background in probability theory, or you're a good blackjack player or Texas Hold'em, that's not going to hurt you. A lot of parallels, but you got to play the probabilities. You're going to be wrong half the time, 40% of the time, 60% of the time, but as long as your winners are bigger than your losers, that's the recipe and formula for making money every month and every quarter. Another old quote was, "It's not about being right or wrong. It's about it's not about being right or wrong. It's about how much you make when you're right and how much you lose when you're wrong." That's huge. On average, after 50 trades or 100 trades, how big are your winners and how big are your losers? On average, you have to have an Excel spreadsheet or a journal to keep track of that. And there's a lot of little good ones out there for that. But trading is very performance based, and you guys can see how you're doing or not doing by your account balance going up or down, but you got to look inside the numbers. What's your hit ratio? What's your average winner? What's your average loser? What's your biggest winner? What's your biggest loser? How many winners in a row on the long side? All that data is very, very important, and you got to track that. So play the probabilities. Position sizing is the next one. Position sizing is very, very important. Position sizing matters in trading, huge. Don't trade too large. Even if you got a 50K account or a $500,000 account, don't put on 10 crude oil or 10 mini S&Ps or 20 just because you can afford the margin. Baby steps, trade small, and don't risk more than 1.5 or 2% of your account on any one trade. We used to say in Chicago, live to trade another day. Very, very important. Position sizing. We always used to say too in Chicago, when you're right, you didn't have enough on. When you're wrong, you had too many on. So even keel. Position sizing, very, very important. Be consistent with your position sizing and don't risk too much and don't trade too large. Typically, a new trader will lose 3 times trading 1 lots. On that 4th trade, they want to get back. They want to get that money back and feel good, and they'll put on a 2 lot or a 3 lot, even though they were a 1 lot trader. And then inevitably, 8.5 or 9 out of 10 times, what happens on that 4th trade when they trade larger, they get stopped out and lose more. So that's part of the psychology also. Psychology ripples all through all these pyramid to profits in one shape or the other, but position sizing is very, very important. Another one is number 7 is patterns. You get comfortable with some patterns. There's 5 patterns I really love and enjoy and teach and trade. The wedges or symmetrical triangles, which is just 2 intersecting trend lines. The market's getting tighter and tighter, and it's ready for a breakout. The wedge or symmetrical triangle. Bull and bear flags, very, very reliable. You know where you're wrong. You're not risking a lot, and a lot of those are 4, 5, and 6 to 1 reward to risk ratios, especially on the intermediate and higher time frames. 60, 180, 240, 480 daily. So we look for those every day. Bull and bear flags are awesome patterns to learn and understand and exploit. And the last 2 are ascending and descending triangles. Also very powerful. They don't all work. A lot of them do, but you know where you're wrong on every one, and it's not a lot of risk. And a lot of times, your NDM, as we say in my room, never down money. Some of them go your way right away, or the most you're down is 1 or 2 ticks, and then it goes your way. Not all the time, but a lot of times it's that type of thing. So it's good to have a couple trades per week where you're never down money, or one or 2 ticks at the most. So those are the 5 patterns. Learn them, study them. We do them in the room every day, every week. I teach them in a class every 2 months in a 4-night online class. And the last thing is performance. Trading is a very performance-based endeavor, and you got to perform, whether you're day trading, intraday for income, short-term position trading, or swing trading for 36 hours to 72 hours or so, or longer-term position trading for 3 weeks to 2.5 months or so with options, forex, futures, cryptocurrency, whatever you're trading. You got to perform, and if you have that Excel spreadsheet and that good trade tracker and journal about you're keeping track of your performance, that's the best way to do it, besides just seeing your account balance go up and down, once a week, twice a month, every other week. We run the numbers, and you want to know where you're at as far as hit ratio, and biggest winner, biggest loser, average winner, average loser, all that stuff is part of performance. So very, very important. Again, 8-legged table, and you got to implement all these 8, in my humble opinion, after 2.5 or 3 decades in the business. This is what I've come up with for my blueprint for success. And again, if you want a free copy, it's a nice clean PDF, Pyramid of Profits. My mom told me I got a face for radio, so there's my little face for radio down there. And really appreciate you guys. Thanks again. Check out trendlinebreak.com for more info. We just started a brand new swing trading service October 1st, and there'll be more details on that coming up soon. And then please like and follow the YouTube page for me, and then there'll be a link for the free copy. Make sure you click that. Just give me your email address and fill out your name, first name, last name, whatever you want, and then get a free copy. Thanks, everybody.